please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, thank you very much, Manisha. Sell on crude is music to the equity markets' ears, and watch the rupee as well. You, of course, will be interested from a currency futures angle as well. But the dollar now has cheapened to 71.78. Remember, we touched 72 earlier in the morning. But away from all these macros, we now have a very interesting discussion lined up for you. Media stocks have been in focus owing to the changing consumption trends led by the digital disruption. I mean, people consuming entertainment and information more through digital than through traditional channels like television. As of now, trends show about 2 million digital customers, and Ernst & Young EY expects this number to double to 4 million by 2020. That's 2 more years. Ashish Pherwani of EY and Vikash Mantri of ICICI Securities join in with their take on how this might pan out. Good morning, gentlemen, and thank you very much for joining us. Well, first up, Ashish, to you. While it would be 4 million, this is still a distance from television viewership, isn't it? Can you tell us how... I would assume television also is growing in terms of viewership. I think your report says it's growing by a compounded annual rate of 9.8. That's almost 10% of a very large base. So how would television viewership and digital consumption compare in, say, 2020?
So I think it's a great question, and it's the million-dollar question really, which is what is going to happen? Is digital going to be a threat to TV, or is it just still too small to worry about? But the way we are seeing it is that television still has a lot of scope to grow. The number of televised households still are growing. And I think the other factor which is really more interesting is the actual time spent on television and the time spent on digital. So last year, the BARC report showed that on average, Indians spend 3 hours and 44 minutes per day watching television, which is very, very low. Though it may sound high to people, working every day, it's still very low to some of the US countries where the number, US and European countries, where the number is as high as 6 hours a day. So television, in terms of time spent, also has space to grow. In terms of households, also has space to grow. But last year, you had an average of about half an hour a day where people were consuming, where they had the ability, digital content. That, we believe, will grow to over an hour, even an hour and a half by 2020, while the 3 hours 44 minutes of daily television consumption will stay as it is. So the quantum of content consumption will increase, but the skew will move towards digital. At the end, who's going to win? I'd say both will win, because it's just offering advertisers far more segmented audiences.
Okay, so that's a very interesting start to our conversation. Ashish, good morning. Vikash, good morning to you as well. Ashish, I'm interested also in what's happening with market leadership within the OTT platforms. Who is gaining market share from whom? And in the listed players, we do track names like Z5, Alt Balaji, etc. How are they doing in the scheme of things? How do you see the subscription grow for many of these players?
So I think that, we always have this fear in our heads that Indians don't like to pay for content. I think that's rubbish. I think we've always paid for content. It really depends on the quality of content and the ease of the payment mechanism. We've been paying for television a monthly fee because Raju, the gentleman who comes from the cable guy, is entering the house. He's making it easy for us to make that payment. I think there should be no difference on the OTT side as well. And while we believe today that just 3% of digital revenues are subscription, that number is going to reach 9% of total digital revenues by 2020. That's not a 3x growth, because the rate at which digital is growing, that's a 6x growth in just 2 to 2.5 years from right now. And therefore, I think subscription is definitely going to grow. On another note, any business model that's not going to be based on subscription, especially in digital, will have a serious challenge in the long run, except for 1 or 2 outliers. But it is something that most of the companies that you're talking about today, whether it's Hotstar or Z5 or anyone else, everyone's got a subscription plan, and the signs are there to see it's going to keep growing.
And I take that point, but let me get Vikas in. both advertisement and subscription, now the advertiser can actually play one against the other, television and digital. So do you think that the advertiser actually walks away with a better deal from television, and therefore, legacy broadcast revenues can still suffer a pain? I mean, we've seen big falls in both the Z Entertainment stock as well as the Sun TV stock. Is that justified? Are revenues under threat, Vikas?
See, let's understand this from an advertising perspective. It is not that all advertising is fungible. There is an objective when you advertise on TV, there's an objective when you advertise on print, and there's an objective when you advertise on digital. And that's not going to change meaningfully over a period of time. If you look at the US markets, while digital is taking away share from all other mediums, it is not that the television medium has not been impacted. So definitely digital is going to grow, and the way I would put it is, if a consumer is going to spend more and more time on the mobile, which is on the smartphone and therefore on digital, clearly ad dollars should go in favor of digital to the amount of time they are spending. And if the time spent on TV is going to remain where it is, and the time on mobile is going to increase, which we have been seeing increase because of more data availability, then the ad dollars have to move there, because that's where the attention is. But what I believe is it is likely to impact other mediums more than television, because television gives you a mass reach, which other mediums don't answer to that, and digital has a more reason to be niche that way, or do targeted advertising. So I think all of them will remain, but yes, clearly digital is taking away higher share, but I wouldn't say at a significant cost to television that way.
But the question also is, who within digital is taking most of the share, right, Vikash? I mean, yesterday when we spoke with Puneet Goenka, he did mention, or he believes that ZEE5 is on track to become the #1 entertainment app in the next 12 months. Does it look a bit ambitious to you, that that statement? I mean, given the way Netflix, Hotstar, etc. are shaping up, and do you believe that he'll be able to break even ZEE5 within the next 3 to 5 years?
I would put it this way, the ZEE5 as a company has very aggressive plans of launching original programming hours in terms of both Hindi and the regional languages. Till now, I have been disappointed by the amount of content which the other OTT players have put in, especially for India. Now, Netflix is largely about watching English content, and there's a few very limited Hindi content marquee properties that you can talk about. The same goes for Hotstar. Hotstar is largely a property where you go for IPL and a lot more of Hindi movies content, but not necessarily original Hindi series that way. Right now, even Zee is at that stage, but they are talking about launching a lot of original programming in Hindi and the regional market. So if they are able to do it, possibly they'll be there. But all I would say, it's good times if for everybody as consumer, if more content is being put up on these OTT platforms. Clearly the winner will be the person who puts in more and better content as of now.
Yeah, that is true, but that will also be expensive, isn't it? See, all the television channels have their own apps, okay, whether it is Voot or Hotstar or ZEE5, all these are apps of television networks. So the hope is that they are covering themselves on both sides. But Ashish, what is your sense? That is also an investment, having an app and getting, getting ready for the digital applications. There will be capex involved even on that side. Do you think, initially, for the first couple of years, television owning companies and groups will bleed more, or will they be able to, find enough money from advertisers and subscribers to do better than they did, say, last year?
I think it's a very simple equation in my mind, which is that, as Vikas said, it's about following the time spent. So if a segment of audience, which we believe is about 2.5 to 3 million right now, going to 4 million, has actually said that they are cord cutters and they watch content only digitally, you have to serve that segment as well. In addition to that 4 million, we also estimate today that there would be around 8 to 10 million people who are actually paying for some OTT platform content or the other, at least one OTT subscription, along with pay TV. Now, they are starting to experience this. In effect, what we are seeing is that the second television screen in the household is moving away from TV to OTT. Yeah. And that's really an incremental growth of content consumption. You know, so I think both will work out, but I think what's most important for all the OTT players is, at the end of the day, a very simple formula, which is customer lifetime value. If you can get your content cost, serving costs and marketing costs on one side and the revenue on the other side to balance out through a good mix of exclusives, which are expensive, aggregated content, which comes for far less, and general news and other types of infotainment content, which gets a lot of frequency going, then models like that help companies make the customer lifetime value formula work. And if they can crack that within a year or two, then I think you should be working towards profitability after that.
Okay, gentlemen, thanks a lot for stopping by and enriching us. So the sum and substance is that there are a lot more people moving to digital. And I must tell you, from my personal experience, my 70-year-old father has now just got onto Hotstar and Netflix, and he has completely switched. He only, of course, watches business news on television. But on that note, we'll take a short break. Thanks so much for joining us, guys. Up next, V. Kalyanarama, the Chairman and Managing Director of Concord, will join in to talk about their new business strategy.
Welcome back to Bazaar. I think we have to move away from corporates and look at stock markets, because there is a decent amount of green that has come into the mid-cap index. Now that one is up 0.75% higher. That's 0.75% at an index level, 140 points higher. And the advanced declines have moved, 1.3 in favor of the green to one stock in the red. So, maybe like 4 stocks in the green for 3 in the red. The winners are obvious, Bajaj Auto, Tata Motors, all the automobile companies are doing very well. Likewise, most of the pharma companies, well, not Sun Pharma, but Oro, for instance, up about 7%, 7.2% at this juncture. So, it's a fairly green screen when it comes to mid caps. What could be abetting this is the rupee, which is now the dollar being cheaper by almost 0.25% at this point, 71.76 on the rupee. So there is stability at several levels, and maybe you want to pull up the bond yield as well, and that one as well has the yield has slipped closer to, I think, 8.02 is what we saw on the bond markets. Yes, 8.02 at this point in time. So everywhere there is a semblance of green coming back. Bonds are higher, the rupee is stronger, and equity markets are stronger. But the only caution I want to put on the table is, pull up any other Asian market, they are all in the red. So can we swim alone?
Yeah. I just want to make one more point on Aurobindo Pharma, which is the biggest mover right now. It's at a fresh 52-week high, by the way. With this acquisition that Aurobindo Pharma has made, it now becomes the largest Indian company in the US, so who is present in the US, and the second largest derma player, and the second largest generics player in the US as well. So a lot of milestones have been scaled post this acquisition, by Aurobindo Pharma, the largest Indian company in the US now. We'll of course get you more details on that acquisition and why there's been 2 days of a hectic rally there. But also we'll tell you about Jet Airways. We learned from sources that the management of Jet Airways has now informed pilots about the delay in salaries. Remember, pilots were up in arms about the delay in salaries. They wrote to the management, and now the management has informed them or come out with their reply. Utkarsh Chaturvedi joins in to give us more details on that. Utkarsh, over to you.
So what we are picking up is that it was yesterday that the Jet management wrote a letter to the employees and to the pilots specifically to inform them about the salary delays. Now what this letter says is that the salaries of August will be credited in 2 tranches. So first installment will come on 11th of this month. Second one will come on 26th of this month. And this is how the salaries will be paid for the next 2 months as well. So for the month of September and October, the salaries will be paid in 2 tranches, which will be one on 11th, second on the 26th. And this is not for all the employees. This is for all for employees which are GMs and above, cockpit crews and AMEs. So, these are, as yesterday also Jet Airways said that we have paid 85% of the employees, but these 50% which we are speaking about, the pilots, they have a very high amount of salary which gets credited in their account. So clearly, after the jet pilots wrote to the management yesterday, going up in arms if the salary is not being credited. Yesterday night only, the management has clarified and given a timeline for the salaries to be credited, but in 2 installments and at 11th and 26th months.
Oh, right. Thank you very much, Utkarsh, for that. Jet Airways still a little bit in the red. We have to wind down on Bazaar on the note that the markets appear to be staging a comeback, but we have to wait and see. Our technical expert, Ashwini, did warn that unless you cross yesterday's high, he would still be skeptical of this pullback. So we are putting all points of view on the table and leave you with a quick snapshot of all the important voices that you saw on Bazaar today. Thanks for watching.